Hello, everybody, and welcome to the Plus3 Futures and Commodities show. We are recording late Friday afternoon, September 8th. My name is Ben Maldonado, and I'm here with my partner, Barrie Hederachi. Barrie, how we doing?
Doing pretty good.
It seemed like it was a very quiet week, but under the surface, there's a lot of stuff sort of brewing here.
Mm-hmm.
We'll review the big five with Barrie, which is ES, bonds, gold, crude oil, copper, the dollar, and the euro. And then I'm going to have just three commodities today: crude oil, nat gas, and cotton. It seems like there's not much going on, but we'll talk about it. There's a lot going on, and mostly of the winding up nature.
Mm-hmm.
The first thing we want to talk about, as we always do, is Bitcoin. Bitcoin, and Barrie and I were talking before we started recording, again, sideways here, but it's sideways under a lot of key things. Trend line, the uptrend line we were using, off of the December lows. We're under that. We're under the full square. We're under the harmonic balance point. And Barrie pointed out a very interesting reverse ABCD that also says we're at a pretty critical spot. Bingo.
Right. Yeah.
Yeah. So does it mean it's game over for the bulls? Absolutely not. If they can reverse up off of this and then get above all the things I just mentioned, it'll be in good shape. But if we lose the ABC and we remain under these these crucial points that I just enumerated, it's vulnerable. It's vulnerable to more decline. So we really have to let it play out, see how it plays out, and then based upon the price action, then we can assess the risk reward and take a shot at it one way or the other.
Hey, what was that cycle that you used to run on Bitcoin?
How many the days you mean?
Yeah, it was the day count and the multiples of that. Was that 40 something?
It was in the 40s. It was like 49, I think it was.
Okay. Because this one is like a 45 almost.
Mm-hmm. Yeah,
So
it's right in there.
that. Yeah.
So, I mean, hopefully, for people that trade this thing regularly, it hits this cycle and gets going again. But really, the history of it since, November, December it's mostly been sideways.
Mm-hmm.
A few 6 to 8 weeks worth of moves and then 3-4 months worth of sideways.
Right.
So let's see. I just saw someone talking about how the volume is off another 17%. And so it's really getting quote unquote dull, which is the time you have to really pay attention, because that's just when things start cranking on it. So we'll watch, we'll see until it, picks a spot here. There's not much to do other than watch. But let's get into it, because I want to spend a lot of time on the ES and the NQs today, because I think they're kind of where the action is right now. Let me send it over to you. Man, that 44.75 is a good ceiling, isn't it?
Seems like it. It's definitely playing out last couple of days.
Mm-hmm.
Because you can see how after we slipped under it, we really, we kept tapping overnight during the day, just couldn't do it.
Mm-hmm.
So let's quickly cap it. Let's go to our 30-minute to take a look at what happened this week. Well, we had a nice run down and then lots of sideways before the run, after the run.
Yeah, and you're wrapping around that 44.54.
Yeah, it's really been the thing, and we just can't seem to get above this 44.72 that we were talking about earlier, and so it looks a little messy. It looks a little choppy, and it was. We really only had like one big down day, and the rest of it was just wrapped around a lot of chop. And you just got to be careful around these quiet markets. Looking at the bigger picture is always good to go back and just remember how we got into all of this. We had, I think, let me go back to the 30-minute real quick. We talked about the square out last week, and we mentioned why we think the square is fairly good, and we should be looking, if it really can't take this out, it would be negative. Remember that? We talked about that last week. And the reason for all of that was we were looking at this counter trend to finish up and looking at the shorter time frames to see if that was give us some clues. So that clue ended up becoming fairly accurate, and we did start to turn down. And so far, it's looking fairly weak. And I would say below 44.75, it's going to remain weak. Yeah, we have a couple of trend lines below. Let's see if they can hold it. If they hold it, then it's probably going to consolidate a little bit longer. Maybe our August got shifted into September. We'll see as far as holidays and slow markets go. But I don't think so, because there's too many other moving parts that are ramping up, like you were saying. So we'll see how all that pans out. But for now, we have this entire block of support right on top of right at 43.70 to the downside. That's the same. We were talking about the same thing earlier when we were at 43.70, and I said, well, we have 100 point clearance. We can just run right up to 44.75 without any problem, and you can see how we blew right through that. So it was really, let's say, more than 100 point run. So I would say the same thing holds to the downside. If we somehow can't get above 44.75, we start losing the grip. We have a fairly clear run at 100 point run to the downside, 43.70.
I mean, you're at least, worst case scenario, you're going to get an ABCD down, and best case scenario, you could catch a 3 down looking at that.
That's right. Well, 3 down is the whole point, right?
Yeah.
If you get that, then it's going to be
a big move.
A big move, and then we'll have a lot more to trade. And I would expect that. I mean, in the back of our head, yeah, we trade the system, but you have to kind of imagine and say, well, if actually this terminated, I mean, the odds are we could have 5 down. There's no, it's not a
possible.
Big deal.
Where does that ABCD take you down to?
Well, if an ABCD comes in, it would be more of a correction on the way up. Right? But a 5 would set us up for a pretty sizable move down. So this would be like a normal correction, right? It wouldn't be a big deal.
Right.
But I would say if this is the 3, well, then watch out, because we could be going down for a couple of 3 months, maybe
testing
more.
the lows. Yeah.
Yeah. Maybe more.
Yep.
So now we're way up here. One day we'll be talking about, remember we talked about that?
Yeah, that's right.
So let's keep that in mind. Remember what happened at this high and why that's important. There was a count between this high and the high, last December. There was a count from this low. So a lot of things came to bear at this high, and we were looking for a counter trend. We got that. We got that almost to the tick on the lower time frames. And market sold off as it should if these highs are squaring out. So far, so good. So for next week, I would say 44.75 would be the sort of the balance point. And if we really can't get on top of that, and if we slip, it's going to start getting, well, it'll be very swift, getting down to 43.70.
Yeah.
And ultimately this 43.25 area is really good support. And of course, markets never stop exactly where we have our lines drawn. So it might go up, end up, finishing up this ABCD, which would be a beautiful move. But it wouldn't be I wouldn't expect it to be a long lasting sort of a bare leg, right? It would be more a little quick correction on the way up. So that's kind of what we have. Before I jump into the weekly, do you have anything to add to this?
Just that, Barry, take a second and show, because some people may not understand when we say trying to catch a 3. Show what we're saying there. Show it like by pointing it out with your cursor. There's the 1,
2.
Two's
is 1 leg.
Yep.
2, and 3 would be the next leg down.
Right.
And then we'd have some kind of, and because this, if that's a 3, then this 2 is a fairly simple 2. Then we'd definitely have a complex 4 and some kind of a 5 to wrap it all up.
Right. And go back a little bit and show an example of, again, that 1, 2, 3 from a high, so they could see it. Like
here's one right there. So here's the high.
Right.
Here's the first sell off. That's the 1. Yep. Here's the 2.
And there's the 3. That's right.
Okay. And so 3 is, technically that's the fastest leg, and
That's the money leg.
that's the money leg, exactly. So you want to try to be able to catch that early on. And you can see even here, one day hard down, the next day, we sold off and came right back up like somebody was buying it up, right? And the following day, boom, that was the thing. So there's a lot of trickery that goes on. Kind of like here, you see, we had the big down day, and then we kind of crawled back up to 44.75. And then, we're starting to head down today, but, screaming and kicking, not wantingly, right?
And
so anyway, that's the third we're looking at. And
that's
here's
what
another one, there's a 1, 2,
and there's the
three.
Yeah. And the idea of our work is to constantly isolate that corner so you can get and start counting. Okay, there's your 1, there's your 2. Where can we catch the 3?
Exactly. And here's one from the low.
Bottom.
Here's the low, right? Back in 2020. Here's a 1, 2, and then here's a 3.
Yep, the blast
out there, right? So that's kind of how that works. And on the other side, there's a 1, 2, and
even
if you missed all of that, if you catch this right, we had 2 inside bar. You lose that, and then just slip right out. So there are plenty of if that's the only trade you take at any time frame, you just better, your odds are in your favor than most other patterns, because the ones you catch will go so much further, and that's where this profit taking comes in. If you always take profit at X amount, then when the third goes, the third legs, we don't really know where they end, and you're going to miss out on all that.
And we'll talk about that at the end today, because I think that's a super important topic that you put a post out this week that I thought was fantastic. So we'll spend some time on that.
All right, let's talk. So we're done with the daily. Then let's take a look at
let's look at the weekly.
What happened was last week, I said, we had an inside week and then we had an up week. So the deal is, if this was a counter trend high, then taking out the low of last week would be really the signal we want to watch.
And we just missed it, I think, right?
Well, you know how it goes.
Yeah, right? Yeah. Because we have an inside bar right now.
Yeah. Right? So 33.50, I think, was the low, and look where we came and tapped.
Right, maybe 34 and change,
just right there, and that's where that 33 came from. We tapped it there, but you see, we really didn't have some huge rally off of that.
No, right? It's kind of sideways,
sputtered away, and then tried this morning and just failed. So this is not looking, let's just say, super hot at this point. So I'll say it again this week, since we didn't decisively take it out. I would say the low of last week on the weekly bar is the thing to watch. We slip past that 44, 33, we're probably going to get into some trouble. So let's watch that. And it doesn't mean the end of the world. We still have a lower trend line. You can see the move up is very robust, right? We're keeping a very sharp angle. The momentum's really good on the weekly. Nothing to cry about. But the lower boundary of that would be 43. So there you go.
Right.
And that's the thing to remember. And if you look at the, so we have 43.25 right here as our, this block support. And this little gray line, I should probably really move it down, the block down to here. It's really 42.99.
Right.
43.25 is probably the block. And it's good to adjust these things every now and then. There you go.
So yeah, there's all of 100 points. Even if we don't break support from here, you got more than 100 on the down.
There's definitely room for a fast move. And so watch those counter trends, start to get in on those, and if it goes, it goes, and that's why we do what we do. And breaking this, we were talking about that weekly trend, like a really nice trend weekly that we have, and this is tied to that. And if we take this out, boy, I'll tell you, we definitely have a couple of months, 2, 3, 4, even 4 months of downside. So we got to really watch this. Not that we hold our trades for 4 months, but it's nice to know early on. So we're talking about this, and All right.
Mhm.
Anything on the weekly you want to add? Other than the
No.
fact that this was really important, and it's look how many bars it took to show us that, we called that out exactly on that week. So
Yeah.
the thing is, you see how long it took to prove it out,
Mhm.
right? Month and a half to figure out, that high is in place. So to really profit from this, it's going to be months longer
Right.
if it really came in. So that's why we watch it every week. And
And the thing to notice again is that potential setup for the next wave down, which would be a third. One down. We've done one down, one up, and the third is potentially there.
And sometimes the market will really get into some kind of a rhythm, and it'll just keep going. So in this case, we're on the square of 81, and we'll see how it works out. So we got these quarter squares, middle of December, and we have 3/5 sitting around February 23rd. So there's a lot of other dates we can get from looking at the weekly.
What's your first quarter there?
First quarter right there would be
Early October.
October 9th, about a month from now. So see how that goes. We'll watch it.
Yep.
And that wraps up the E-mini part. I think that's fairly clear, right? 44.75. If we
very
can't
clear.
do that, then we're probably going to go visit this lower bounds, and probably a good trading setup.
I wish we could put like flashing lights on the video talking about pay attention to see if that next leg is coming in or not.
Well, we have a lot of regulars that watch it, so they're probably taking notes.
That's good.
And I wish there was a way, but we need marketing and that.
Yeah.
Not quite there yet.
No.
So moving on to bonds, you guys, we talked about this being that we were trading this up bounce off of the quarter line as a counter trend, and which it was, and then we were expecting to go lower. So it's slowly crawling lower, and I think long as it's below the trend line, we're expecting it to push lower over time, with the one eye on the fact that bonds really like to go sideways after it makes into a new level. So this was an old level. You can see this quarter square, and you can see that, this is another way to look at things, right? If you look at this quick lesson, we have a quarter square here. Is that good enough? Can I just point like that?
Yeah. Yep.
You can see how we consolidated there for a while. Then we dropped into the next one. You can see how we consolidated
the next quarter. Yep.
Next quarter. And then now we just slipped through. How did we slip through? We broke through, came up, couldn't get above, went down to the
next quarter.
The next quarter. Surprise, right?
Yeah.
And now we rallied up towards the upper, the upper side of that quarter box, and we failed. So clearly we're working this box now. And if that's the case, obviously the places to take trades would be when things get, when you get signals to buy when it's closer to the bottom side, and when you get signals to sell on the counter trends to the upside. So
it shows how good that 90 vibration is. Look, because look, it's just perfectly going through those quarters.
Yeah, it's got almost. Look at this line here, right?
Yep.
We were sitting on top, broke through, came back, tap for almost a month.
And then the same thing on the bottom.
Yeah, and you can see when he couldn't do it through here. Tapped the lower quarter, came back up, couldn't quite get to the top high, right? The top of the box, and it starts to fail, and it just fell right through.
Give you the fast move.
So that was the market was telling me exactly what was going on there and through there. And again, risk is very low because you also had the trend line going through from these two highs. Yeah. So it's even if you guys just take a screenshot and study these and even duplicate these lines. I know we talked about squares last time, and a lot of people want to start doing squares. So I'm going to look into if there are any online software that we can use other than Wave 59 that could just do squares simply, so people can just have the lines, just have them there. So that's bonds daily. So we're bearish. We're in the middle of the box basically, and we're just waiting for it to give us the next signal.
Drop the next shoe.
Yeah. And so here's the weekly with the square 144. And we recognize this halfway point, half of the square, to be important early on. And if that's the case, then we're expecting the market to at least go up and touch 114 down here. And if we're really going to finish up a leg and give it a little bit of a break, then probably the ABCD down into 106 area. It's 106.6 would be the exact. So that would give us a good enough of a false break, right?
Mm-hmm.
Kind of what I'm thinking. And it really wouldn't be completion without getting there. So it's going to go. It's just
It sure looks like that 144 is the magnet for price right now.
Yeah, you can just see, right? It's all pulling down
It's
there.
getting pulled in. Yep.
And it might be, I mean, ultimately it's going to go further, but this is our near-term goal.
Yep.
Stay with that. All right.
The daily, one last thing on the daily, go back to the
Uh-huh.
daily bonds. I noticed when I was looking at it, it looks like we've got 2 of 3 drives in and maybe going to work on the third here that will take us down to the ABC or lower.
That's true. It'll have to happen quick next week. Well, if it happens next week, perfect.
It'd be perfect. Yeah.
I mean, nothing better than ABCD with 3 drives to help it out. That would
For sure.
That would be perfect.
Just something to watch.
Mm-hmm. And we might have a smaller ABCD in here if today's high were to hold.
True.
You know what I mean? So,
we'll there you go.
Might be a little too small to hold the beast, but there you go.
And getting bonds right is so important right now because, you know, a lot of other markets are trading off of that. Bonds and currencies, you know, even if you don't trade them, you got to have an idea what's happening because they certainly affect risk and other markets.
Right. And you can see even on the daily coming off of the consolidation high, 90 down is 111, 112. So I mean, there's definitely, like, we're not calling any lows here. Basically, that's what's happening.
No.
All right. Speaking of not calling lows, we're not calling lows here either. So
no,
we have. Well, I think the market needed a little bit of a rest after this sprint, and I kind of almost heard the breathing this week.
Yeah, the rest.
So it was a week of rest, and it's very, very bullish. So it's like a bull flag here, right? So let's let it be. 91 is still sort of the target to the upside. And potentially we have this ABCD pushing up into a high.
Crude looks good.
Yeah. Anything you want to add to this daily?
No, I'm going to talk about crude, so we'll do it. We'll do it in my segment.
Okay, good.
I'll show a couple of things.
So yeah, I think there's probably more to go because we're not near anything worthwhile. And so I think this is the whole secret.
That's huge right there. Huge, huge, huge.
So last week we peaked right at the, what would you call it? The key level here.
Yeah, the full square, the 45.
And this week we managed to stay above it. There we go. That's the whole thing. And we quietly went sideways and we broke new ground. That's what happened.
If you follow either of us on Twitter or you watch our videos, you know staying on top is a huge thing, right? Because what it does is it means you have the odds have increased that you're setting a new sort of floor for the next move. Right. And we've shown tons of examples of it. Barrie will show you more examples, you know, of sitting on top or getting stuck. It's really critical, especially the first time you get that full bar above sitting on top. It's big. And this is on a weekly too. This isn't even a daily. This is weekly.
So there's definitely juice left in this is the point.
Absolutely.
Yeah. So continue. We're just bullish. That's pretty much all. Moving on to gold was very interesting. That 1940 is acting like some kind of a sort of bigger level than I imagined.
Right. Somebody's defending that big time.
I'll tell you, some weeks you just kind of wonder, you scratch your head.
Yeah.
So here we are, 1940. We held it for 3 days. We went to the top of the square, 90 last week. I mean, you got to say, you know, you can't say there's nothing to these squares. These aren't sandboxes, right? So we went right up into the 90, stalled. We had this box drawn out, came right back down. Now we're at 1940, 3 days in a row. So what does that mean? Well, it's consolidating. And but on the underbelly, we're on the underside of the 90. So I would say a little on the weak side. Consolidation could be a little bit wider. But what's happening here is, we're building another triangle.
Huge.
And
Yep.
it's moves out of these things are always powerful. So we have to start tracking this one now.
And Barry, when you look at your weekly and monthly, they're in triangles too for gold.
Okay, we'll look at that. You
It's
can see
really winding up.
It's a very sharp triangle, so obviously it's going to break, and gold is very good at doing triangles and breaking. So let's start watching that. For now, not much to do. We're basically waiting to see what happens after 1940 and this trend line below. But the push, I have to say, is kind of to the downside because we are making lower lows.
Yes.
All the way from up here.
Yep.
So we'll leave it at that.
It may set up like some sort of washout and then rip higher.
Well, it's gonna, ripping higher is to me at least two of us, right? It's
and that's based, it's based on your monthly and weekly, right? They're
Exactly.
still very bullish.
Well, listen, we're at all time. I mean, we're just one couple of days from all time high here, just hanging around like no problem. And this entire correction is really interesting because look at how many months we spent here, and we could have corrected down to 1750. We could have corrected down to 1600, but 16 and a half. We didn't. We stayed above 1919, which is level here, and between 1919 and 2000. So that's a very bullish consolidation. Yeah, sure. We didn't get above the half square, but we didn't sell off either. So
no,
for now it looks very bullish. So we'll treat it as that. And you can see, like, we weren't really involved in trading a lot of that because it's just
mess.
It's not in that mode yet. We're waiting for time. Let's take a look at copper. The only mover this week, right? Ripped lower.
Yep.
Of all directions, and we were expecting that because what was the whole point with last week was that we can't really settle above the 50%, then it's going to be weaker. If it could hold above the 50% line, we could expect it to move a little bit higher. And of course, as it always does, Friday closes right at the
right at your trend line.
Right at the trend line. And I didn't draw this trend line. This is that trend line duplicated, and I just put it down.
Yeah, I know.
And which is the same angle as its two highs.
Yep.
So you can see this is why it's easier to see these things with a squared chart, like we talked about last week, and to do forks and things and all kinds of geometry. So for next week, well, this just looks weak, the trend line or not, until we get above the 50% square, or we get into and really test some of these levels between 340 and 350. We have to imagine this is going to be a little soft.
And a lot like gold and silver, copper monthly and weekly are also in triangles.
Right.
And that's happening in a ton of commodities right now, which I'll talk about later. It's Triangle City right now.
Right. And looking at the weekly copper, well, we're back to the trend line. Now, if this thing doesn't hold, I would say we have entirely another process that's going to happen, like an ABCD correction, wash things out and restart the leg into the 24, 25, 26, that period. So maybe we spend the latter part of 23, early part of 24, finishing up this consolidation and sort of cleaning house, cleaning all this up, and then set up latter part of 24, the next run up. So that's sort of the longer term. For now, let's see if we hold this or not, because we could easily consolidate up here as well. So for now, it's a little soft, and we kind of know where the support is, which is 340 to 350 up in this area. All right, moving on to the dollar. Dollar did pretty well. So the 72 degrees down from the high is still sort of our target. It's around 105.5, 106. And I thought this ABCD, I mean, it's a little tricky ABCD because of the, the B and the C.
Right.
Being very, a little bit abstract. But you never know. It's good to rip one in there and see what happens. But obviously we have this square line, and the magnet is really that. So if anything, we're going to go up and false break it up through here before we pull back at this point. Why give away something so perfect where you can trap a bunch of traders, right?
Right.
So I think, we're still bullish. It's very far from the trend line. So we could, and we did the sideways, this couple of 2-3 days sideways, a little bit of sideways, it still was grinding higher. So overall positive, and we're looking for this, 105.5, 106 area. And I keep saying 106, even though it's above the line, because I have a feeling if we go, we're probably going to check above this high.
It's been super strong, the dollar.
Yeah. And the weekly really kind of tells a story.
Someone said it's 8 straight weeks up.
Yeah, that's right. With a little consolidation here. So, and we called this out, man.
Yes.
I'm telling, we were, as soon as that broke and recovered, it's like, hey,
at the 90, yeah, that was a big red flag.
At the 90, and you can see how this is such a classic false break and a fast move. So I mean, here are the lows, just made it look like it's all over, and that was a washout. And here we go. So at least basis this, here's another reason why I keep calling 106. So 50% of the square coming off the low in 2021 is 106 and a little bit of change, 106.19. So, I mean, there's no reason why we can't go up there and touch that. And we don't really have anything. We could say we did do 45 degrees here. So it's possible we start stalling a bit. So we'll see how that works out. So there's our 45-degree move, which looks pretty good, huh? Considering.
Beautiful.
But I'll tell you, it's more than the 45-degree. What's important to watch here is the slope of the move. This is very, we joke about, really sharp slopes. I mean, look at this one. We were laughing about this, like you're saying, hey, wait till it breaks. And if you look at this one, it's even steeper. I mean, way steeper.
Wow.
So clearly we can't keep that up. So we're probably going to, consolidate here at some point, or at least have a little bit of a correction. So that's in the cards. And if you've been on the long side, well, it's probably a good time to take stock and see what's going on. Weekly dollar, that's the weekly. Let's move on to the euro. Well, that's a much better ABCD looking at the weekly, and we came into support. And if you consider the 45-degree move in the dollar and this ABCD completion here, sure, we could consolidate a little bit before dropping. At the same time, because of the ABCD and the half square, if the euro clears this and starts dropping lower, we have a lot more to go down.
Yeah.
Just like if the dollar clears that 45-degree mark we looked at, it has a lot more to go up. But this alone will give it a little bit of a chance to consolidate or, counter trend a little bit. That's all I got. You're going to cover natural gas?
Yep. I'll cover gas.
Well, look at that, huh? Quietly holding on.
Just crawling. And Hang Seng, not much, looking a little weak, and not much to say here because we're obviously going down and slow. Not much to talk about. Anyway, let me put it back to you. All right, Ben, what's happening in the NASDAQ? Well, as we were talking about with ES, there's another potential, big move coming here. We had the high come in, which we triangulated, that we've had the first thrust down. Now we're getting this correction back, and look at where we're failing. Yeah, that's an important spot. That's that full square, which, failure here and rolling over. Again, let's look minimally. If we just did a big ABCD, takes us down a little under the full square.
Right.
But if we catch a third, I mean, could we come down 13,000, 12,000 pretty easily? So we're on the lookout here for, the sort of signs that this counter trend has failed. And the ideal thing would be is if we, because we had an inside day here today after yesterday's down bar, if we take out the lows of Thursday's bar, that's it.
Yep.
If
not going to be bullish, that's for sure.
No. And if we were to rally and fail here, it would give us a lower high because we poked above before. But if we fail, and get completely stuck under, again, it would be a pretty nice setup. But this, I mean, just notice this triangle because we're seeing that, at least I'm seeing that in a lot of markets. The other thing we want to look at is if we zoom out a little bit and go to the weekly, it becomes a little more clearer where we failed.
Yeah.
If this is the high, we failed right on the half square. Got an inside week. So again, we take out last week's lows. It should be lights out for the bulls for, whatever move comes next, whether it's, just pull back to the full square or we get a really deep correction in some sort of panic. The setups are sure there. As you showed in the ES, the setups are there for potential large moves in the next 2, 3, 4 weeks, if they're going to come. And we'll just have to see how it plays out. Any comments here on the weekly or the daily? I could switch back to the daily too.
Well, I think just we have to watch. I mean, in this case, it'll really be this week's low is going to be important, but also last week's low. I mean, that would really sort of pin a longer term turn here. So we'll
absolutely
watching that closely.
Yeah, you do use the lows sometimes on the inside bar, don't you?
Yeah, depends.
To give you shorter term timing. But I mean, it's laid out. Doesn't mean it's going to happen 100%, but the setup is there, and you watch the setups because, here's examples of what happens, right? You get a low, higher low, thrust up, another higher low, and then the big move.
And also, you talked about that inside bar. So you see, if we take out this week's weekly low, that means that inside bar, the low of that, the low bar, yesterday's bar would also have that low would have to be taken out. You see?
Yes.
So in that case, it's okay to use that weekly because we see the daily would automatically click into place.
Right. It would give you a continuation move in the daily.
Exactly.
So again, it's there. I know there's been a lot of publicity about Apple and Nvidia and stuff like that, but
that's exactly when you got to watch out.
The broader market is showing weakness as well. So again, it's not a guarantee. We have to watch the levels. We have to watch the price action. You have to watch your bars, on a weekly, monthly, daily basis and see what story they're telling. And the story right now is that these markets are vulnerable. On the commodity side, there's not a lot for us to review today. As I said, we're going to do crude oil, cotton, and natural gas, and 2 out of the 3 of those are continuing their sideways. But I want to show you the setups in relation to crude oil. On the grains, they're finishing up corrections still. They're either sideways or trending down, trying to sort of hammer out that bottom. I don't think there's a lot of downside left, but there's not a lot of setups for upside momentum yet either. As I mentioned, when Barrie was doing gold and copper, gold, silver, and copper, all in triangles on monthly, weekly basis. So there's not a lot to do there. On the softs, sugar has some divergences at the high. There's some squaring out at the high. There's a potential false break at the high. So if you're long sugar, really, really tighten up your stops and keep a close eye there because we may have completed a fifth there and are pretty much done with the move and have to do some sort of corrective move. Coffee's in the same boat as the grains. It's trying to find its bottom. And cocoa is, probing, trying to find its top there. So there's not a lot of activity and not a lot of things to do. But let's take a look at crude oil. And the reason I want you all to look at crude oil is very bullish. As Barrie showed, we had, basically a sort of a pause this week. But look where we're pausing, right? We're pausing above the full square. It's 4 days in a row. Price all above the full square, which means it's all above this massive 7-month base. And why am I showing you this? Because Barrie showed it to you. Look at the base, right? Look at the base, look at the price action. Because the next 2 charts we're going to look at, they just don't have this yet, but they've got the base. Also, I wanted to show you this on the weekly for crude and the monthly. we might run into some resistance here on the weekly, which is around 89.24, call it 90. That's going to be weekly resistance on the full square. And then on the monthly, we've got half square resistance above, which is at about 90.50. So in your target zones, Barrie, I think you had 90 to like 95 was an area.
Well,
There's
91 is the next target.
Yeah, 91. So that area is going to be, not saying it's going to top it there, but there's going to be some resistance to chew through based on this higher level geometry.
Mm-hmm. What's your 50% of the square there?
Here, 90.54.
9. Yeah, so it's right there.
Yep.
Mm-hmm.
So right in that area. But the chart looks bullish, and the chart that we want to look at before we switch over, the daily, look at that base. Mm-hmm. Starting in November, December last year, and then the breakout happened in July, right? So you got 7-8 month base there. Now let's go to one of my favorites that I talk about often, cotton. So cotton, we started this basing pattern October, November. So we are 8, 9, 10 months in. We've had this first push up. We stalled at the half square, which is to be expected, right? That's the half square. We've had a pullback this week. So far, we've got a higher low. Mm-hmm. When we get the reversal here, you want to be on cotton. I think this next reversal is the thing that could really push cotton to start moving. The weekly and monthly are sort of coming back and testing their triangle breakouts from the previous week here, up here. And this little pullback is normal. It's what we kind of see. It's sort of, let's come back and test to make sure this breakout was real. See, on the daily, you can see we're sort of at the top of the channel. Same thing's happening on the weekly, monthly. So cotton, I don't know if it's going to be this coming week or the next week or the week after that, but as long as we stay above this channel, stay above this harmonic balance point, and keep putting in these higher lows, the big move up is coming. Anything else you got to add on cotton, Barrie?
Well, it's exactly what you said. The base is building. There is a move coming. I think the patience here will pay off. This 84.29, I really like that line. We'll see how that holds up. That's kind of it.
I mean, it's basically, it continues to do the things it needs to do to tell us that the probabilities favor a bullish outcome. That's the bottom line.
Well, so for sure. Yeah. Goes without saying. Yeah. For sure.
Right. So it's one that I want to be involved with. And that's the type of chart we're trying to find. Mm-hmm. There's not this nebulous, it's stuck in the triangle, it's trying to break out, or we don't know which way it's going to go, or it's got to finish. It's like the metals we love long term, but when you look at the dailies there, you just can't get involved yet because you don't have that confidence that we've got a low and we're beginning to build that base, from which it can launch higher. Here, your base is in place. We've started the launch. Now it's time to get that move that gives us that separation.
Well, if it's going to be any of any help, I'll tell you this much. Mm-hmm. Cotton holding above 80.25 was very bullish. Mm-hmm. Where that falls on you.
Let's see, 80.25, right about there.
Yeah. So holding above that, it's really bullish, like let's say since the June low. Mm-hmm. Right. So we did that. Now we consolidated between the 80.25 and about 89.25. Okay. There's a 9
right up in here. Yep.
Right there.
Yep.
Now the trick is, and hopefully we'll remember this later, but if we can clear the 89.25, okay, and move higher, get on top, right? If we can get on top of that, we're going to run at least minimum. We're going to run up to 120.
Nice. Yeah, that's 103. 120's up here.
Right. So I would say at least to that half square, let's say 120.
Yeah. Yeah.
So that's kind of my targeting. I think if we can do that, that's the potential. So you can see it's worthwhile, the risk reward. And
that's the key, right? Listen to his targeting and what you can see where we're risking and where we'd have to stop it out. Those are the setups that we look for. And to find those setups, it gets back to sort of the way Barrie and I approach it, which is find the corner, get the first move off the corner, isolate that corner, get that, whether it's a low or a high, isolate it, get that first thrust off of it, and then look for the first pullback. And that's how you get these kind of favorable risk reward setups. And cotton is one of those situations. Right. Let's look at the other one we've been talking about for a while. That's natural gas. Since January, February, we've been building a base. So we're basically 6-7 months into this base. But here's the thing that's we've been pointing out on a weekly basis, right? We're getting these higher lows, series of higher lows, another one today, right? Or yesterday was the low and we reversed it today. And again, it's just starting to turn up. And what happens when these things go, I want to show you. So here's this little triangle we're in currently. Look at what happened the last time we did a triangle and broke out. Not saying it's going to do the same thing, just saying that's the kind of pattern we're in right now.
Yeah.
So while it may have been frustrating for some people, and if you bought options here for next month for 30 days, you were screwed. We got to get the breakout before you put your options in place. Because we need, for options, you need the momentum of that big move, so you can overcome your theta decay that normally happens in those things. But this one is a pattern I like. It's taking longer than most people want, including me, but that's just, again, going to build up the pressure and the power that once the move comes, it's going to be a big move. I liked the action again this week, giving us another higher low, the reversal above the harmonic balance point. We're going to close above that, which is important for the week. I just think it's, again, just like cotton, just like crude, it was a matter of time before you got the break, and then you saw the move in crude. We're going to see the move in cotton, and the odds favor we're going to see the same kind of move in nat gas. I know there's not a lot to add when it's been going sideways like this, but anything else to add here on this one, Barrie?
Well, just patience.
That's the key.
This is the hardest part in commodities. So, they tend to go sideways 80% of the time. So
right.
Let's wait and watch. It's still in the making, like they say. So that's good.
Yeah. That's it for the commodities. As I said, most of them are either correcting or triangulating, so we don't want to get involved in that. We want to look for the one setups where the potential move is coming, and we've showed you those. Barrie, the topic I wanted to talk about today was related to the post you made talking about profit taking and how you take profits. I think in the trading world, 90% of the time people are talking about when to buy something, how they buy something, what they're buying. Very little time is dedicated to when and how do you sell, right? How do you take profits? How do you sort of maximize the returns you're getting for the trades you're making? And I think if we spend 5-10 minutes talking about that, I truly believe it's going to be helpful to people in terms of their trading, and having them examine what they're doing and how they're doing it and how they can improve.
Can you see that?
Yeah. It's a 30-minute.
Yeah. Not a lot. I mean, not a lot maybe not a lot on the 30-minute, but that's all right. Charts are charts. As far as taking profit goes, what I posted was about, there's always this question about where do I take profits? Oh, I know. One of the talked about, I'm getting out of my shorts and I don't want to. And that made me think of that, like, wow,
right.
That's really the difficult part. And so there's a bunch of components to this, but one of the things is not to think of trades like a one event thing, as a buy with a corresponding sell. You buy one, you sell one. So what I wanted to introduce was to talk about having multiple positions instead of thinking like, if you go in with 3 positions, you get out with 3. Instead of that, how can you layer it out so that you can consistently make some profit? And so the key is being able to consistently make some profit versus consistently making a little bit of a loss, right?
Right.
Want to have the spin on the positive side. So if you look at all the numbers, I mean, Mark Douglas did a lot of work along those lines, and I learned a lot from him. And one of the main things was about understanding the movement of price and also our limitations. The biggest thing is, like, we really don't know where price is going. There are probabilities for this, that, and the other thing, and patterns. And of course, patterns morph into other patterns, and then they morph into bigger patterns, and they're fractals. So it's never ending. That's why I think, trading's so sexy. It's like you just never will really understand all of it. You'll understand some parts of it, but understanding it theoretically and knowing patterns and how it moves is completely different thing from actually trading it and making a profit. So one of the things that even we did a long time ago was, you guys can try this. You can just flip a coin and say heads are buys and tails are sells, shorts, and just mark down the trades. And if you do 100 of them, and if you manage each one properly, like the way I'm talking about, you'll end up profiting. So, hey, right there, you have to kind of wonder why. So it's really not the entry, it's really the risk. And this is what we always talk about. It's profits, when people say, oh, profits will take care of itself. The thing is, it's the risk that's really going to help manage that. And what burns you out, what blows up accounts, it's all improper risk management. So one of the things that you can really do is first thing is figure out the risk. What am I willing to take?
In other words, and when you say figure out the risk, Barrie, it's calculating at what point do I get out of this trade and what will my loss be at that point?
Exactly. But the thing is, and this is why these end up becoming like weekend courses, because, because you can say that, but then you have to look at, everybody has different systems. They cobble together, this kind of system with moving averages or momentum or levels or, all these fancy ways to get in. But that's what I'm saying. You can just flip a coin and get in and still make money if you manage it properly. So getting in is kind of a joke, right? Because
it's where traders spend 90% of their effort.
Well, because that's the thing that could be sold to people. Retail market loves, all these systems and methods and ways to get in. And this is, the whole bit.
The Holy Grail indicator.
The Holy Grail. And it's the exit that nobody, like if we were to sell exit plans, nobody's going to even pay attention to that.
Right.
So anyway, getting back to the risk, so you have to figure out the risk based on the system that you use. And then you have to correlate that somehow to your account, the amount of money that you're risking, amount of money you have available for trading. And it could be, a little less, 1/10 of 1%, depending on your account. But I wouldn't go anything more than 1/4 or 0.5% for a trade, because that's a lot. And I'm conservative, so those are the kind of numbers. Let's say 1/10 to 1/4 would be reasonable, but half was okay. 1% people talk about, right, Ben? Like 1% is sort of an acceptable. What's the upper limit of that? I don't even know. I wouldn't say 5%, but 1% is probably the norm. Would you say?
Yeah, 1% is generally the upper bound guidance, but some people do go 5%. But remember, if you do 5%, 20 trades and you're wiped out. Yeah. 20 bad trades and you're wiped out.
And after 50% of bad trades, the rest are going to be bigger losses. You're not going to stick with the plan at that point.
No, you're going to be chasing and trying to, double up and that sort of thing.
So that points to another problem, which is not properly funding the account before you start. And that's another whole story. But let's say we can do 1%, and that could be done through options. It could be done through the Forex. There are other ways to do it. You can trade the grains or other things. And these days you can trade all these mini contracts, right?
Or ETFs. There's plenty of stuff.
Yeah, you can manage that 1% to 2%, let's say max. And once you figure that out, what you want to know is you want to figure out that what your system odds are. How many winning trades you get for 10 trades. Let's just say it's 6. Let's say you get 6 winning trades. And then you know exactly what your loss is going to be. On the average, for each set of 10 trades, 6 are going to be wrong, and that would be your 0.5% or 1%. Are we good up until then? That's clear, right?
Right. And except in your example, it's 6 would be right, 4 would be wrong. If you're right 6 out of 10 times.
Yeah, 6 would be right. Well, you can flip it and still make money, but yes.
That's true. Absolutely.
Right? So 6 would be correct, 4 would be wrong, and that would be your loss. And the point being that it's something that you know ahead of time. It's not an unknown. So we started by talking about the market. We don't know where things go. We don't know where it's going to end. We don't know when one pattern fades and another one starts, right? So all of these things happening, we got multiple time frames. Well, the only thing you really can control and really know is, well, how much am I willing to lose? So that's one thing you can control. So you better control that. Now, if you control that, now what's on the other side? Other side is unlimited potential, theoretically. Yeah?
Yes.
So once you can nail down your risk, all right, it's 1%, let's say. Now, what's the return side? Return side, we don't know. Now, some people say, well, let's do 2 to 1, 3 to 1, whatever profit. If I can make 3 times, that's great. Let me just take it. Okay, fine. Then you end up seeing the thing going up 10 times your risk.
Yeah, that's the thing. If you say I'm going to sell it every time it doubles, you'll never have a triple.
Right.
If you sell it every time it triples, you'll never have a quadruple.
Right. And what happens in trading, invariably what happens is it's those ones that run away that makes you the most amount of money.
And it makes up for a lot of those losing trades.
Exactly.
And that's why you have to try and capture as much of that, figure out a system to capture as much of those when you get in a winner, to stay in as long as you can.
Right, without getting hurt.
That's right. But using a system, it's not whimsical, right? It just can't be, well, I feel like this is going to be the big one. It's got to be systematic.
Mm-hmm.
Like whether you're selling at a full square, selling a third at a full square, or selling, half at 90 degrees, or, whatever your system tells you that you've worked out, you just have to stick to it.
Exactly. I mean, it takes discipline. There's no question. And you really can't be emotional about all of this. That's also a given. So we talked about getting in, and you can control your risk to some degree. And I think that's fairly clear. Now, what happens from there on? Well, what happens from there on is you have to somehow get into a break-even position as soon as it's logical.
Right.
And that means, well, and there are a lot of formulas to do all of this out there. So you have to sort of research and see, what's simple enough to be practical and not get bogged down in that. And it doesn't take a lot of, complex math to figure this out, because what you want to do is just get to break even. If you can get to break even, you can at least live to put the next trade on.
Right.
Yeah. So that's the point, is you want to go for the long run. You want to go for the long run, which means you want to be up break even as soon as it's practical without breaking the trade up. And so the next step would be, there's a couple of different ways to go. I'll just kind of explain. I mean, I do a couple of different things depending on the trade, so I'll talk about that. So one is you know what your risk is every time based on the system you're using. Second is that once the trade starts to move in your favor, you have to figure out what can I do? Where should my first trade exit be in order to lighten up my risk? And that could be your first target. And there are lots of ways to get targets. We have levels. We use squares, but you can have some kind of indicator-based thing, which I think is a little bit difficult when it comes to levels. Mm-hmm. But you can calculate different levels. You can be resistance, basically draw horizontal lines based on previous levels, which works just fine. So however method you want to use, and there are lots of them, you want to figure out where you want to cover the first part of your trade position so that your risk is less. You got some money. Now, if you cover everything, if the market moves, 10% higher from there, where you just took a risk and you didn't really get the reward. So keeping that in mind, you want to figure out how to exit this without breaking up the trade and still being able to stay in for the long run. And what you do is you can exit half of it, you can exit a third of it, or depending on the pattern, maybe you can just move your stop up 50%, reduce your risk by 50%, maybe move it up to break even, maybe a little bit less than break even. So you can play on both sides. You can play it by moving up your stops or down your stops to reduce the risk, or you can do it by taking some profit at a key level so your risk is lower, or you can do both, right? You can take some profit and move your stop up. Okay, now it might be break even. And you still have some breathing room because let's say you took out 50% of the trade. Are we good up to that, Ben? Is that clear?
Yeah, and I think one of the key things, because this is a mistake I made and a lot of traders make, is the market starts moving, so you move your stop up quickly because you want to get to break even, and you move it to your entry, but structurally you're not giving it a chance to pull back and breathe, and you get stopped out, and then the big move happens.
Right.
I mean, everybody that trades has experienced that.
Exactly. And so you want to watch that. Now, just to address that part, if you moved, I mean, this all depends on the system and a bunch of other variables, but basically, if you move your stop down to entry, you get stopped out. And if you're day trading or anything short term, you're looking to get back in as soon as possible if the original signal is still in place. Like a lot of the times your setup is still there. You just had a spike or something just to take everybody out. And the setup is still there. So you want to just flip and jump back in because you're taking the same risk. You already took the same risk. So break even is okay, but long as you know you might have to jump back in.
I mean, let me give you an example, Barry. Look at where you're at that 450. Like, let's say you bought the 450 in time, this structure over here on the right. Let's say you bought this spike when we pulled up, pulled back, stayed on top, and then reversed, right? So let's say your entry is the top of that little bar right there. Yeah, right there. Yeah. And then you get the spike up and you say, oh, I'm going to put my stop at break even. And it pulls back and takes you right out.
Right.
You
well,
know?
What you do is we know 44.72 is there. So as it goes up into that, you want to unload and pull this into break even.
That's right.
That's what you do. And if this thing starts to break down, you have to exit as soon as you realize it's not holding up, right? That's the main thing. And that could be break even or a little bit better, whatnot. But these kinds of markets, that's a win to be able to scrape something out of the market.
Profit. Yeah, that's right. Yeah.
And what you want to live for is it takes off. Like in here, let's say you were trying to get in
short
here.
That, yeah.
Or even breaking of this trend line, you got in there, your stop is up here. And once it pulls away and you know the momentum's like rolling over, then there are no worries, and up until here, it was, of course, there's a risk we test here, come back up. But once it starts to roll over and we take out these lows, then you have a free trade. You move it, your stops up to here, you're good, and you can peel off as you please. But the main thing, getting back to our plan, the earlier thing, the topic is that, so we know the risk. Second part of the part is to get to break even as soon as you can, or reduce your risk on that first impulse, the first move that allows you to breathe a little bit.
And this is why you need multiple lots to be able to let some go and take some profit and reduce your risk.
Even if it's 3, it could work. It could work just fine. Do the first one at the first place and pull up your stops a little bit. So
with the micros, you could get a bunch too.
Yeah, with micros, you can. That's why I think these days it's so much easier to do this than say 20 years ago.
Sure.
And the second position would be a normal exit. That's what the second position would be, where you have your sort of the main resistance or any kind of a, red light that market's reversing, characters changing, everything's flipping around. Okay, well, at that point you get out of the second because you want to bank it if you have it. Now you still have one left. Now we're talking in thirds. Of course, you can do it in any division you want. So if we take the second out at your normal target, then you have one left thinking, well, I should have gotten out with that. But that's the one you want to, it's like your insurance payment. That's the one you just write off. And if you lose it, you lose it. You just want to keep it just in case. Now, holding that last third, obviously you're at break even. And what you have at that point is a free trade. It's a risk risk-free trade. And who doesn't want that every day?
Right.
So soon as you get to the risk-free trade, you're good to go. You can pull the stop up to anywhere you want and allow the market to breathe a little bit and move a little bit. And it doesn't mean it's always going to be 10 baggers, but it'll be something. And once in a while, you get them really move overnight or move during the day or towards the close. And
a 30, 40, 50 point move, and you're still in it. And it's beautiful.
Exactly. And you'll still have something in there, and that will make up over a year or even a month or a couple of months. It'll make up for so many trades you'd have to take and cover at that first resistance or first sign of weakness or strength. And it pays off. It's just the numbers game, and you just have to think of it like that. And the hardest part in that is really giving up that 1/3 where you could say, well, I could have had that. Why would I cover it?
That's the mind game, right? And,
yeah.
And a lot of this profit taking is battling your mind, because your mind starts calculating what you could have done or what it cost you and all this stuff. And it gets you emotional and off of your system. Whereas if you just detach from it and say, this is what I'm doing, this is how I'm doing it. If it works out, great. If it doesn't, great. Yeah, that's the attitude, because when you start calculating in your head what you gave up, forget it. Yeah. It messes with you terribly.
And plus what happens is at that point, you're not really using your creativity and your sort of intuitive, market sense. So when you have a free trade, I'm telling you, everybody knows when they have a free trade, which means they're in a trade and there's no risk. At that point, you can breathe because there's no gun to your head,
Right.
And it's really when you have a free trade that you can actually think clearly and there's no fear, or at least shouldn't be any fear because it's a free trade. So you want to get to that state of being able to handle a free trade, because then you can be creative, right? Because we all have that creative side. And I think even though the entry can be mechanical, I think the exit is where you can really be creative in how you can get out. And by having a free trade, it sort of creates a space where you can actually do that without being under pressure, the entire time.
Right.
So that's another benefit of letting one go. Yeah, you might not make it. Yeah, you might come all the way back to break even, like today, if you did that from 44.72 and 50 up in here, you can come right back. But that's okay. Next time it'll go twice as much, and you
took profit on the way, and that's why you can do it.
Right, and it'll also sort of develop your sort of neural pathways to work with that, and you'll become better and better and better at it, and not let the sort of that pressure and not being able to, what if it comes back and I leave all this on the table, that kind of psychology get in the way, and you'll end up making more because you're allowing those bigger moves to show up. I mean, what's the point if a bigger move comes and you're not in it? The whole point of taking that risk was to get the biggest move possible.
That's exactly right.
So you have to somehow figure out a creative way to stay in, but risk-free. That's the key thing, is that you want to stay in, but risk-free. Yeah, bank something, but risk-free at the end on the last one.
Agreed. Well, Barrie, thanks for addressing this issue, because I think it's not adequately covered or discussed anywhere, and I think it's critically important, because this is where the mental aspect starts coming in. If you see a profit that you could have had and you start beating yourself up over it, it then affects your next trade and the trade after that, and it sort of compounds. So I think sharing that wisdom with people is going to be really helpful. Anyway, that's it for the show this week. We appreciate you all listening, appreciate the likes and the subscribing and ringing the bell and sharing as we try to grow the channel. And this week should again be full of activity, as Barrie showed with the ES and I showed with the NQs. We're at a big decision point here for, are we going to get a fast move down, or are we just going to correct and sideways and chop around some more? So there could be that issue of where you're going to take profits coming because of a fast move. So we want to be ready. We want to be in them. We want to be watching things like cotton. We want to be watching nat gas. We want to be on the crude, and let these other commodities sort of finish working out what they got to do before they're ready to move. Anything else you're focusing on particularly, Barrie?
Well, we definitely have to watch the bonds, watching the dollar, watching crude.
Mm-hmm.
That's it. Those are the key things.
Awesome.
And of course the ES.
Great show, Barrie. Thanks for listening, everybody. Have a great week, and we'll talk to you next week.
Thanks, Ben. Good job. We'll
All right.
talk to you later. Mm-hmm.
Thanks. Bye.